Hello everyone, welcome to FinMeUp. So FinMeUp is an app for business people, as we are the everything related to business app, with various features in the app like our stock picks, quizzes, podcasts, summaries, and our FinMeUp game, which is a fun game where you can compete against your friends while learning how to trade and learn more about companies. So hopefully you can learn a lot through the app, so go check it out. It's available on Google Play and App Store. Just type in FinMeUp. So before we get into the stocks we are currently buying, just take note that everything we say is our own researched opinion and not advice to you, as you should always do your own detailed research before making your financial and investment decisions. So getting into this stock pick video, a lot of people say this might be one of the greatest investment opportunities that we may see in our lives due to the current situation going on in the world and shares just falling off a cliff. And as Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. And that is how he made most of his wealth after the 2008 crisis, where he bought a lot of stocks at their lows, and shares are currently trading really, really low compared to the all-time highs just 2 months ago roundabout. So he also says it's not about timing the market, but about time in the market. As it is almost physically impossible to time the market, it is now a good time to just start building your well-balanced and well-diverse portfolio in these times and just try to get a good average. We will also do a video on how to buy and how often to buy and all of that, but that's to come. So getting on to the companies we are buying at the moment. First of all, Tesla. So in the FinMeUp app, we did a whole podcast in depth why we love Tesla and why we will continue to own this share for the long term. But in short, they are years and years ahead of their competitors in so many aspects related to the batteries, the cars, and just everything. And they are more than just an electric car company. So you can go check out that podcast. But this whole movement to clean energy and this clean world is really also happening rapidly, and they will benefit from this as they are ahead of all the competitors. And they are extremely disruptive and innovative. And usually in times like we are facing now, where shares and everything just goes down, these disruptive companies always tend to come out much stronger and gain market share. And that is why we love Tesla, especially now at the current prices and levels. Secondly, in times like these, you want companies with very good balance sheets, as there's a lot of uncertainty and now they can make a lot of investments, and a good company for that is Apple. So they have a lot of cash on hand, and it's just an amazing company for the long term with their various aspects like the iPhone and their services and the MacBooks and everything. As Warren Buffett also says, this might be one of the greatest companies the world has ever seen. Then thirdly, Visa or MasterCard. You can't go wrong with any of the two. But these shares barely ever dip, as they are such great companies and play such a big role in people's everyday lives with payments. And we are buying this dip and will continue to add to our portfolio if the market goes lower. Who knows where the market will bottom out, but they are such great companies. The next one is more ETF, but that is the ARK Innovation Fund. Like I said previously, this fund focuses on disruptive, innovative companies that will change the future. So disruptive companies always tend to come out stronger and somehow gain market share in their various industries in situations like we are facing now. So they focus on these companies and they do their research on what will change the world, and they invest in that. So you can buy this whole ETF and get your piece of the pie in these various companies. So they include names like Tesla, Illumina, Stratasys, Square. We will also cover those in more detail later or on the app. Then we move on to Amazon. So everybody knows Amazon. They are just continuing to grow their successes and expand their footprint, especially with the Amazon Web Services, which is extremely profitable and growing at a tremendous rate. And this online retailer is also gaining market share in this time now, as people are staying at home and more going online and ordering online. So Amazon is just a great company, and we also cover them in depth in a podcast on the FinMeUp app, where we go into the various aspects of the business, as are not just what we see on the wall, but they have so many aspects in their business. They even have their own healthcare line, so that is just crazy. Then Alibaba, which is the giant Chinese online retailer with enormous potential, especially in China, and the online market is just continuing to grow, and they're also an amazing company. Then you can also look at the dividend ETFs. There are various ETFs which is related to companies with a lot of good paying dividends. So in times like these, it's probably a good decision to have a good dividend payers in your portfolio, as it is a good passive income to have, as you basically just get money saying thank you for owning this share or this ETF. Then Nvidia. So this is just an amazing company for the fourth industrial revolution, as they are also extremely innovative with their various aspects like the artificial intelligence, the chip making, and their various other income streams. They have a footprint in various industries like gaming, healthcare, education, retail, smart cities, telecommunications, autonomous driving, media, and the list goes on. So you get it. They are getting their foot in every door, and they are just growing their market share, as well as they are so innovative, and all these industries are growing, like the online education, healthcare, gaming. So they are at the right place, and they are just a phenomenal company. Then moving on to the next one, which is Facebook. So a lot of people are now locked into their homes with this new stay-at-home economy, and people tend to get more bored when they are at home. So they tend to visit more of Facebook's products like Instagram, Snapchat, Facebook, etc. So Facebook might actually benefit from this new stay-at-home economy. The advertisements might be a bit lower now, with small companies feeling the pressure, but at these low levels of this gigantic company, we are starting to increase our shares in Facebook. The next company is also just a very, very healthy balance sheet company, and they always show why they are one of the greatest companies in the world, run by Warren Buffett, and that is Berkshire Hathaway. And Berkshire actually has a massive, massive, massive cash pile ready to be invested in quality companies at low valuations. So Warren Buffett and Berkshire Hathaway waited over the years for another great buying opportunity, and now with this current situation going on where the shares are just falling off a cliff, he will definitely be looking to buy more shares and will really benefit once this market picks up again, as they have a lot of cash on hand. And then the last share is Alphabet, which is also known as Google. We just cannot live without Google in our lives. And YouTube, which is also part of Alphabet, is also growing at rapid rates and will continue to grow as an entertainment platform. As people, there's a lot of people that they don't even have Netflix or anything like that. They just go onto YouTube, as there are so many videos and good content on YouTube. So that is also growing at tremendous rates. They also have Google Classroom, and who knows what market share they will gain in the online education sector during this stay-at-home times and the current situation going on. So those are the shares we are currently buying. We are actually looking at a few other companies some small, some medium, some large, and we will continue to update on those, especially through the app, where we will share our detailed opinions and views. So go check out the FinMeUp app, and we will also share more emerging market companies we are looking to buy and shares we are avoiding. So all of that is coming up. So stay tuned. Go check out the app. Subscribe. Please like. It will help us a lot. Cheers.